All right, Mr. Lee, welcome to Proof of Thought podcast. This has been a while in the making, so I'm excited that we're making it happen.
Yeah, thanks for having me. It was awesome to meet you, Charles, and yeah, looking forward to getting into it.
Love it, love it. So, as we start out here, could you give us a quick overview of your background? What did you study in school, and where did it take you professionally originally?
Yeah, I've been a technologist for about 30 years. I've been in information technology, doing different roles from support to architecting systems to now managing an IT a department. So I've been doing it a long time, and so it's made me curious and knowledgeable about technology. I did not go to school right away. I actually worked for 9 years and then started school. Undergrad online, and then I did an MBA that I graduated in 2017, which is kind of what leads into my Bitcoin journey. We can certainly get into that, but yeah, that's kind of what my background was, and the school element was really for me to get into more management roles. Again, trying to move up in terms of income, in terms of responsibility, kind of what you're taught to do in the fiat world. So.
Right on. And yeah, let's get to it. When did you stumble upon Bitcoin, and what moment made it clear for you that you should actually take Bitcoin seriously and help others understand it as well?
It's so I know somewhere along the line I heard about Bitcoin in the 2010s. Can't remember exactly when, and just dismissed it. Just was not curious enough about it. In 2017, I was putting on an event at work. I was at an engineering company, bringing different folks that are doing innovative things with different technologies, AI, etc. And I remember one of my coworkers was like, "Hey, we should have a blockchain booth." I'm like, "Blockchain? What is that?" I don't know. And we didn't do it. And so that's too bad. 2017 would have been a nice time to learn about Bitcoin. But no, so when I finished my MBA a couple of years later, I was asked to come back to my alma mater and teach a course on emerging technologies. And so finally, I had an excuse to really dig into AI. Of course, we called it blockchain or Bitcoin, crypto, quantum computing, all of those different kinds of things. And so, if you want to learn, you teach is kind of the methodology that I follow. So I dug into all of those technologies. And as I got into blockchain, I was particularly interested in, okay, how does Bitcoin actually work? And started looking into it a little bit, enough to put my class together. And then I got distracted, right? I kind of got into crypto and invested in other things and was mesmerized by the world computer, Ethereum and, yield schemes and all these things. And so kind of lost some money and gave it up. We stopped really focusing on it in 2022. And remembering, I was still listening to podcasts and things. And I remember the day that Bitcoin hit like 15K, right, in November 22. And I was like, okay, it's dead, right? And so that next year, that next fall, 2023, I'm on a flight. And I'm like, yeah, I wonder what that Bitcoin thing's up to. And I look at my phone, it's like $20,000. I'm like, oh, that's interesting. And then while I'm on this flight, it goes up like $5,000 or $6,000 in the course of an hour. And I'm like, what is this thing? It got me curious enough to start looking into it. And so I had a friend of mine that he'd actually put a course together on Bitcoin and from a engineering perspective. So I went back and watched that and was like, wow, I'm totally mesmerized by the technical aspects. Then I listened to the Saylor series with Michael Saylor and Robert Breedlove, and that's truly what orange pilled me, because then I got the full view of like, oh, what is Bitcoin's role in the world as a truly scarce, the world's first true scarce asset, right? Like a completely finite asset. Never in humanity had that before. So really understanding like where digital capital is in terms of our human evolution and storing our energy and those kinds of things. I was totally hooked. Started moving some of my other assets into Bitcoin. And then I learned about the ETFs that were coming in the beginning of 24. At that time, it was not a foregone conclusion, but I was like, I think this is going to happen. And so I started pestering my wife. We have to move some substantial assets into Bitcoin. Like this thing is really going to rocket to 100,000 before we even know what hit us, And that didn't quite happen, but right away. But of course, it did ultimately last year, right? And then I discovered MicroStrategy and started getting into some of the Bitcoin treasury company strategies as well. So really, the last year and a half has been kind of going down that rabbit hole, getting kind of orange pilled by Michael Saylor and Breedlove. And then, of course, diving into all of these different books, right? Bitcoin Standard, Broken Money. I just read I just read The Big Print by Larry Lepard. That's a fantastic read. And this just deepened my conviction to where now all of my investments are either Bitcoin or Bitcoin related equities. So it's been quite a journey.
Very fascinating. And yeah, we just had Larry on the show as well. So
Mm,
that episode will be coming out soon. Great conversation there. Uh,
awesome.
but yeah, wanted to double click into the Bitcoin ETFs. So, as you mentioned, you were paying attention to Bitcoin around the time that the ETFs were approved in late 2023, early 2024. And I've heard you mention before that the average person who's maybe not on X or not paying attention to Bitcoin was skeptical around that time about the approval of the ETFs, or simply just didn't even know what it was. You can say the same thing today, I think, about Bitcoin going from 100K to 1 million sometime in the next decade, and then to 10 million in the following decade, barring, something doesn't happen to the underlying technology, or, it doesn't get shut down politically. But all that we've seen over the past few months with the new administration and with all that's happening with corporate Bitcoin strategies, the probability of it not going up and to the right over the next 1 to 2 decades is pretty low at this point. And it's one, if not the best risk adjusted bets one could take today. So just given that asymmetry, why do you think so many people are still not paying attention to what is going on here? If you turn on mainstream media like CNBC, you'll find that even when the hosts do bring on someone like a Michael Saylor, they just seem to be trolling when they could be giving people really life-changing information that could free them financially. So what do you think is going on here, and why do you think people still aren't paying attention to this thing that has such asymmetrical potential?
I think it's a really good question. I mean, if you think about it, though, think about the incentives. So, in business, in as an executive, in the media, all of these things are really focused on, kind of what works, right? They're kind of, we have a certain paradigm, we have a certain set of expectations for what a successful company looks like. We have a certain expectation of how you do investing, right? 60-40 portfolio, right? 60-40, 60 stocks, 40% bonds. We have a different view about how an asset should function. Gold is like, nobody even thinks about things like gold or hard money or any of these concepts. And so there's a couple of things at work here. One is conventional wisdom is kind of what rules the day. I think that's one factor. So if something is kind of outside of that conventional wisdom, think about when Apple, right, first burst on, to the scene, when Steve Jobs came back and started kind of getting the business focused again and focused on a narrow set of products that would just be really revolutionary and amazing. But there was all this doubt about whether they could survive. They were outside the typical paradigm. We're just going to look at the IBMs of the world, right? And those kinds of things. Think about Amazon. When Amazon started, investing every spare penny they could, in those early 2000s, and all the media all the time saying, oh, they're not making any money. Why would you ever want to invest in this company? And now it's one of the largest companies it's ever been, basically has rewritten the rules of retail around the world, and they won, right? You look at Michael Saylor, kind of with a company with MicroStrategy, sitting at $1 billion enterprise value after 25 years trying to compete against the Microsofts, the Oracles of the world, discovers Bitcoin and takes his company to 100 billion. So part of what's happening here is in the media, and I would also say a lot of business leaders just can't quite get their heads around getting out of conventional thinking. Because if you think about it, I mean, even someone like Warren Buffett did things differently, right? And that's what made him one of the most successful investors in the world. Often it's these contrarian investors. Think about Michael Burry during The Big Short, The Big Short that was written about the global financial crisis, and he really doubted that the mortgage market could actually be sustainable. And he started seeing like, hey, there's a lot of people in homes that got mortgages they probably shouldn't have had, and I don't think they're going to be able to pay them. And he started shorting the mortgage market. And what happened? Everybody called him crazy, right? All of his investors called him crazy, and then he ended up making a lot of money. So conventional thinking, conventional wisdom really kind of boxes you in and limits your options. So I think that's one major dynamic that's at play.
Got it. And thanks for breaking that down. And obviously, you have a You have a deep IT and technical background, and from what I understand, are currently focused on end user computing technology, zero trust architecture, some things that are tangentially related to Bitcoin. And so I just wanted to know, what does that actually look like in your day to day job, and what best IT practices would be most useful in the world of Bitcoin and vice versa?
Yeah, so it's interesting. Like I said, I've grown up as you mentioned, grown up in IT. I've done different roles that are kind of more back office, more data center focused. Right now, I'm more focused on end user facing technologies. And one of the things I take from that line of work is that we want to really be focused on the end user experience. So how do you make the end user experience seamless, smooth, right? Easy for them to do their jobs. If you think about it, if I provide you a laptop, right, for to work at my company, that's basically your gateway to your day to day work experience. That's essential. Whether we give you an office or not, that kind of is your office. In the old days, right? That's your file cabinet. That's your desk. That's potentially your phone, all of the things that would have been in your office. And so you need to make sure that you're providing that person with an experience that's easy to navigate, easy to use, and things like that. And so in Bitcoin, I feel like we have a similar trajectory that we've been on to try to make Bitcoin easier and easier to use, particularly around custody. So if I think about different custody solutions, and I haven't been around Bitcoin super long, but kind of hearing about the early days, how hard it was to protect your Bitcoin. You hear the story of that guy. I think he was in England, or I forget where he was. Maybe it was here in the U.S. I don't remember. But anyway, he had a file that had his Bitcoin wallet on it, right, with hundreds or thousands of Bitcoins, and somehow he took a hard drive out, kind of forgot about Bitcoin. It got thrown away. And then all of a sudden Bitcoin price rips and he's like, oh, where's that hard drive? And he realizes he threw it away. And so, there's potentially billions of dollars lost, and things like that. So custody has come a long way since then. I mean, now you have really great options. You have, not endorsing anybody, but collaborative custody solutions like Unchained that are really easy to use. They kind of walk you through the whole process, set you up with a situation where you can have two of three keys that control your Bitcoin. So they have one for you to kind of help, and then you are responsible for managing the other two, and they make a pretty smooth experience for that. I've been playing with the BitKey wallet from Block, Jack Dorsey's company. That's a really nice experience. Again, you have this kind of multi-signature setup, but now you've got a mobile app on your phone, and then you've got the a hardware device that you have to tap with a near field communication or NFC chip, and authorize. If you're going to send Bitcoin, you have to have that physical device with you. And then Block, of course, also holds a key. So custody, I think, is the user experience area where we need to get better and better in Bitcoin. And similar, I'd say, with Lightning. Try to make Lightning a more smooth experience as well. Lightning being kind of a layer 2 that allows you to transfer Bitcoin to somebody basically instantaneously with very, very low fees. When I first started playing with Lightning a year or so ago, I was using a self-custodial wallet. So I wanted to, I had this bias where I was holding my own Bitcoin, but I had to manage channels. And I was like, how does that work? And I would try to send, it's funny. I brought my wife in. I was going to pay my son for some chores in Bitcoin. I was like, hey, watch this, honey. I was just, was new to Bitcoin, was all excited. Try to send him a transaction. It's like, oh, you don't have enough liquidity in your channel. And I'm like, what? And she's totally uninterested, totally unimpressed. And I'm like, why did that happen? And I'm messing with it. And so now I've been playing with other solutions like the Jan3 wallet, Aqua Bitcoin, right? Which is it's kind of self-custodial. It's really it's federation custody, basically. So you peg your Bitcoin into the Liquid network, which is kind of a side chain versus a layer 2. And basically, I'm able to now transfer Bitcoin easily to my son, to his Liquid wallet, and things like that. So that experience is a lot better, right? So yeah, I think that's where, when I think about the user experience with Bitcoin, how do we make things easy for people? How do we onboard the next billion users? You're not going to do it with having them, manage channel liquidity and things like that, or trying to store all of their Bitcoin on some wallet file on their laptop. We've got to make it simple and easy for them. But they also have to do some work, right? It's not free. They have to learn something about how to manage their assets and take control of their wealth. But we should try to make it as easy as we can for them.
Makes sense. I love this concept of tinkering with these different technologies, and that's the best way to learn, as you seen yourself. And it's okay if you don't get it right the first time. It might blow up a little bit, but you figure it out. You try something else. So that's really cool. And great to hear about what Dorsey's doing in this space with Block. I feel like once in a while you'll hear him come out, he'll talk, give a nice keynote or something like that. But I think for the most part, usually quietly in the background, doing a lot of stuff in the space. So that's interesting.
Mm-hmm. Yeah.
Yeah. There's also a famous saying in the Bitcoin community, trust but verify. And just sticking with the IT theme here, how do you reconcile that against zero trust architecture principles that you currently work with?
Yeah. So zero trust is this concept in IT of you don't trust anything. And to try to make it clear first, maybe before I explain what it is, maybe what it isn't or what it wasn't. Previously, you would have like a trusted device, right? We would say, oh, I trust your laptop because why? I don't know. I put a certificate on it, or it's a device that we have in our inventory system, things like that. And so we would say that's a trusted device. Or if you're in the office, you're on a trusted network, those kinds of things. And what we've really seen, and you certainly have probably seen it in the news, is that those things always can still get exploited. Like once somebody's able to get into your network, they're able to quickly move laterally, if you don't have appropriate controls in place, to start infecting multiple devices. And before you know it, they can basically do a ransomware attack on you, right? And what that means is they can basically lock down your machine, encrypt your drive, and say, hey, you have to pay us, in some kind of cryptocurrency to this address in 24 hours, or we're going to, nuke your data. So these things are having any kind of trust of a network or trust of a device or trust of a particular geography, it's just you can't ever protect yourself fully. So this concept of zero trust is the idea that you don't trust anything. So instead, you have to put policies in place, put systems in place such that kind of every time you have to maybe authenticate, right? Authenticate every time you want to launch an application or go into some data store. You should have to authenticate and say, okay, are you still somebody that we know? Are you still someone who should have access to this data? And so there's an array of tools that can do that. So it's funny. If you think about the cypherpunks, the early folks of Bitcoin, they've always felt this way. They've always had a distrust of government, distrust of banks, distrust of really anybody. So there's always been this notion of, like you said, trust, don't trust, verify. And so I think corporate IT is really just kind of coming around to that over the last few years of just, let's not trust anyone, make them authenticate, make them prove that they are someone who should actually have access to this data, make them authenticate, make sure they're authorized, all of that to ensure that they should have access to our data. And that's really how everybody needs to think these days. And hopefully it'll lead to better practices, right? Things like passkeys that are starting to get used instead of passwords, because passwords are awful, right? Everybody either forgets their password or they use multiple passwords. They reuse them across platforms. I think I just saw in the news that a whole bunch of passwords were leaked just yesterday from a bunch of major services. And so if people are using the same password on their Gmail as on their bank, as on, Fidelity, somebody's going to be able to hack into anything that they have access to. So you have to assume that that's going to happen and take steps to protect yourself with multi-factor authentication, leveraging passkeys, maybe even consider a YubiKey, like a hardware device that you can use as part of your authentication scheme. Those are really things that we're starting to move towards in corporate, and I think even in personal technology as well.
Yeah, and like you said, it's about best practices. It's like it's not that I don't trust you because I don't like you. It's just the best practice matters. And thanks for catching it there. It's don't trust, verify.
Yeah. Well, because what it is you have to. So, and I'm not in the cybersecurity realm, but of course I work with cybersecurity all the time, and we always like to say like everybody in IT is really on the security team in a lot of ways. But you just have to know that you're going to get hacked. Like it's not a matter of like when or if. They're always going to try to come after you and find some opening, right, to get into your data or into your network or get access to your users' PCs. And you have to imagine that what am I trying to think of? Not malware, but phishing attacks, right, are the way that people are really succumbing to these things, right? You're getting an email and it looks legitimate and it's from your bank and it says, oh, your transfer didn't go through, please click here to check your order and re-verify your transfer, right? And of course then they're able to drop some kind of payload onto your laptop. So this idea of like having any kind of trust with anything in the digital realm, I mean, look at AI. Here's another thing too, generative AI. There was a story not too long ago of an executive at a company getting on a Zoom call. Seems like it's with either their accountant or CFO, whatever it is, about to authorize a transfer. They go ahead and authorize it. They move forward with the transfer, and it turns out it was a deep fake. It wasn't really there wasn't really the CFO or the accounting leader, whatever the role was, and the company was bilked out of millions of dollars. So you have to just have a skeptical eye all the time with anything digital. And I think that very much comports with the cypherpunk ethos of Bitcoin of like, don't trust, verify, make sure that it, what you're doing is what you really want to be doing, right? If your Bitcoin exchange reaches out, make sure it really is your Bitcoin exchange. Maybe don't follow the email. Maybe go log into your own account, through your typical means and go validate. And you'll probably find that the email was fake.
Spot on. All right, Lee, I want to take us to our first principle section, which is a bit unique to this show. Essentially, I'm going to ask you a few questions, and for each of them, I'd like you to break down your thoughts and your reasoning step by step. So the first one here is about different ways you've referred to Bitcoin before. You've called it the digital transformation of value, even property, energy, and money. Sounds like you're very much on the same page as Michael Saylor. Could you break down for us what those words and analogies mean from your own perspective?
Yeah, I mean, Bitcoin is not an easy thing to describe briefly. Even the idea of digital gold kind of falls flat. I mean, I still will sometimes use that if I'm talking to somebody. But if I think about first principles, you're breaking down a talk that I've given recently, thinking about Bitcoin as digitally transforming value. So value being how we store our energy, our life's work, right? If I, work my job and get paid every 2 weeks, I'm currently getting my life's work given to me in a currency that's debasing 7%, 7 to 10% a year, right? The US dollar. Not a great place to store my energy. I could store it in gold, but then I've got to find somebody to either store the gold for me with high amounts of cost and risk to transfer the gold, or I have to buy some certificate or an ETF that's supposedly backing the gold. So not really a very effective way to hold my energy. But if I put it in Bitcoin, there's no loss because the fact that it is provably scarce, that there will never be more than 21 million Bitcoin, that I can validate that the Bitcoin that I hold is truly mine. It hasn't been spent before. So from a value perspective, it's absolutely a digital transformation of value in terms of from analog, from dollars and fiat or gold to Bitcoin, to digital capital, I think is the way that Saylor describes it. And I agree. I do see it that way. I also see it as digital property, right? It is perfect property rights. The U.S. is really built on, the United States is really built on property rights. It's one of the key elements of our capitalist economy. And Bitcoin is like finally something you can truly hold. Like think about how many things can I truly actually custody. Even my home, if I owned my home free and clear, I have a mortgage. Well, let's say I didn't have a mortgage. Well, I still have to pay the government property taxes. So do I truly hold my property? I guess not. My stocks and my portfolio, well, they're all held at the DTCC, right? So it's not, I'm not really even custodying my stocks. Somebody is custodying those for me, and I log into a brokerage and I can see them, but I don't hold them. So if I think about property, the digital transformation of property, Bitcoin gives me perfect property rights, something I can actually hold on a hardware wallet, on my phone, whatever, or I can choose to have someone custody it for me if I so choose, like the ETF or holding at an exchange like River or Swan or Unchained, etc. So absolute perfect property. And then from an energy perspective, this is another one of the things that I found so attractive, again, as a technologist, the whole idea of the Bitcoin mining ecosystem and how mining drives the Bitcoin network. This whole sense of the miners are incentivized to spend tons and tons of energy to try to solve the next block in the Bitcoin network and be able to process those transactions and get that block subsidy, get the fees from the Bitcoin protocol. So they're incentivized to, hey, I want to get Bitcoin, so I'm going to put energy behind the network and mine to try to get those fees and get that subsidy. But then that digitizes energy. Now you've got interesting scenarios that can come up. My favorite I usually talk about is gridless compute in Kenya, over in Africa. They will go into a situation where, hey, we want to get our Bitcoin mining rigs put in place and be part of this protocol, and they'll look for advantageous opportunities to do so. The one that they've found most often is hydropower. Very, very cheap. As a miner, you always want cheap electricity. So they'll go and partner with a power producer and set up a hydro mining facility. Sorry, a hydroelectric facility. They'll then put in their Bitcoin mining in order to give them some base load, because without some kind of base load energy, there's just no incentive for these power producers to build out. And so they'll set up their Bitcoin as the base load. The energy company has the hydroelectric dam going. And now the side benefit, the third win there in that stool, is that the local citizens that live in the area that previously didn't have access to regular power, now they get regular power 24/7, fairly inexpensive, because, of course, the power company is getting this nice baseload electricity from gridless. So gridless wins, the citizens win, the power producer wins. And that's a scenario that, like, how would you do that without Bitcoin? So Bitcoin really digitally transforms energy. So those are some of the ways that I think about the power of Bitcoin in terms of storing my own personal energy and efforts in terms of value, transforming how we handle property rights and perfecting property rights through the idea of self-custody, and then three, really digitally transforming energy. By basically monetizing stranded energy, wasted energy, low-cost energy, and channeling that into a variety of productive purposes. So Bitcoin is truly unique as an asset.
Wonderful. And can you walk us through both proof of work and proof of stake and make the case for why one is superior to the other?
Yeah, it was so interesting when I was in when I was teaching. I no longer teach now, but when I was teaching emerging tech and talking about crypto, I used to give talks on the metaverse and on all these amazing things with Web3 and all these concepts. And the reality is, those things are maybe interesting, but they're not really. What are they really backed by? So you mentioned proof of stake, proof of work, right? These are two different consensus algorithms, two different ways of driving a blockchain protocol. Bitcoin really started, of course, as proof of work, right? And this idea that you have to prove that you've done something. You have to channel energy from the physical world in order to create digital scarcity, channeling physical energy into Bitcoins that actually get produced by the protocol, and then you can either sell them or do whatever you want as a miner with them. But this idea that you have to actually do hard work, you have to come up with a number that the network is looking for, and then if you have met that threshold, get your work validated by all the nodes that are on the network. I've got a node sitting right here on my desk with all the controversy, whatever. It is Bitcoin Core, but it's like, I don't know, it's a version. I'm not sure. It's a very old version. I haven't upgraded it in a long time. Anyway, but the nodes all validate that I did the work. I didn't double spend any of these coins, all of those kinds of things. And so you have this like network that's really based on energy. It's based on truth. It channels the physical world into the digital world. With proof of stake, you don't have that. You don't have that at all. So with proof of stake, this idea then is you still have the idea of nodes or validators, if you will, as they call them. But basically, I would take my coins, and I did this. I was in the Atom ecosystem, and so I would accumulate a number of tokens. I would pledge those tokens to a validator, and the validator would basically use my tokens to process blocks in the network. So the more blocks I have, the more tokens that I have in this network, the more I have as different proposals come up to make changes to the network, I have a lot more weight, right? I can start to influence maybe where the network is going or what things that the core dev team does. And so that is kind of a very, very different system. There's no channeling of physical energy. There's really not truth so much. It's really just kind of whatever the developers come up with. And things could be swayed by me as an investor. If I hold a lot of tokens, I can get kind of my way with the network. The other dynamic you often see is you have a nonprofit that's typically driving, the network. So when your core devs have a roadmap, that's kind of that's a scary thing, right? That's not a organic, decentralized network. Now you really have a centralized network run by even if it's a nonprofit, you have it run by this foundation. And then the big players, the whales that have a whole bunch of tokens for the network, can sway where the network is going, what updates will be approved, all of those kinds of things. Bitcoin, no. Bitcoin requires consensus. There's a lot of talk about different features that people want to turn on in Bitcoin, but you've got to get consensus, number one, with everybody in the various communities of developers, of miners, node operators, economic nodes, if you will, investors. And then, of course, you've got to convince the node operators and miners to all upgrade to the next version of your software. Again, I'm running this version of Bitcoin Core from a year and a half ago. I haven't really seen a need to update it as such. So that's a real major difference of a network that's backed on energy, on truth, on the physical world translated to digital, versus a centralized group that's able to kind of do whatever they want to do and be supported by whoever just happens to have the most coins. Not very decentralized, not very anti-fragile, and so it's a very different system.
And with these properties, why do you think it's unlikely that a new cryptocurrency can just use a proof of work system and become the next Bitcoin?
I mean, the main reason, if you think about it, really is network effect in a lot of ways. Bitcoin's proven. Bitcoin has shown itself to be anti-fragile over 16 years now. It's an over $2 trillion asset that has grown to be number 5 or number 6. I haven't looked lately on the list of kind of the largest assets of the world, after gold, after some of the Mag 7 stocks, and then usually Bitcoin is in there in the 5 or 6 range. So it has massive network effects. It's proven itself. It's shown itself to be truly decentralized. And so that really makes a lot of difference there. It's kind of grown organically over time to be what it is. Other projects, there are a few that have tried to pop up, even with a proof of work consensus mechanism. But again, those network effects are real. So Bitcoin's already kind of shown itself. It's proven itself. You're already seeing a lot of actors in the space commit capital to Bitcoin. You look at like a Michael Saylor, right, that through his company Strategy is now the largest corporate holder of Bitcoin. They're almost at 600,000 Bitcoins that they hold. You look at the ETFs, the exchange traded funds that launched January of 2024. They've been the most successful ETF launches in Wall Street history. They've never seen anything, quite like it in terms of the capital that they've brought in. And so that's bringing a lot of network effects from Wall Street, institutional adoption, and corporate adoption. And you're seeing sovereigns as well, right? How many sovereigns are you seeing, mining Caspa? Not to denigrate Caspa, but, do you see companies or countries doing that? You don't. You see Bhutan mining Bitcoin, right? You see, Russia getting into the game of mining Bitcoin, right? You see El Salvador really embracing Bitcoin. And what has it done to the nation? I mean, it's transformed El Salvador. I mean, Bitcoin wasn't the only element, but there's another, catchphrase we like to say as Bitcoiners: Bitcoin changes you. And Bitcoin changed El Salvador and really transformed that country into one that is peaceful, that is prosperous, where people can thrive. So I don't see these other kind of upstart currencies really doing that. And maybe the last thing I would say is think about how these projects are conceived. So often they're conceived by some founder, right, or a founder team, and they're trying to get their project launched, and they're still actively participating. Bitcoin's unique, right? It was kind of an immaculate conception in a lot of ways. Satoshi, the pseudonymous character, Satoshi Nakamoto, launched the network, interacting with his various cypherpunks on the mailing list, getting Hal Finney and others to start mining and kind of sending Bitcoin back and forth, and then disappeared, right? Within a year or two, he disappeared from the project. And he still has 1 million Bitcoins to his name that people like to track, but they've never moved. So you have a very different situation where the person who could stand to gain the most from this project has left the project. He's gone. And so now it's truly decentralized. If you're a founder and a founder team and you launch a project, are you really decentralized? Is it something that we could build an economy on? Could I put all my capital into it? No, I couldn't, because you might change it. You might, oh, I have a new network and it's got 50 million coins, but there'll never be any more. And then, oh, I changed my mind. I think we need more. Let's go to 75 million coins. But so I have no idea. Maybe you'll do that. Maybe you won't. But with Bitcoin, it's decentralized. There's 20,000 nodes around the world. There's massive mining companies around the world. You have to convince all of them to update their node software to run your, your new code that has 42 million Bitcoins instead of 21 million, right? And that's not going to happen. That's not in anybody's financial interest. So that, I think there's a few elements of why the projects might be interesting. They might try to solve some different challenges. I haven't seen them do it, so I stick with Bitcoin.
Makes sense. Yeah, the Immaculate Conception, probably one of the most important points there. And then, as you mentioned, the network effects. Bitcoin has gotten to a point, that it's gotten to a point of scale that make it very hard for something new to come in and overtake it. And I think the third element there, the institutions, which I wanted to touch on, the institutionalization of Bitcoin is definitely in motion now, and one big emerging trend is around banks, and big banks in particular, that will start to enter into the arena. So I'm curious, what do you think that means for Bitcoin in terms of innovation, adoption, and price action going forward?
Well, you're definitely going to see. I mean, if you think about the big banks, right? There's definitely going to be a lot of capital that can continue to come into the space. For a lot of people ask a lot, like corporate adoption. Why hasn't corporate adoption gotten bigger after Michael Saylor kind of showed that it can be done? And you are starting to see a lot of smaller, zombie companies, as we call them, kind of smaller, non-growing, slow-growing companies adopt Bitcoin as a treasury strategy. But if you're running a large, business and it's successful, throwing off lots of cash flow, in a lot of cases, you're not going to go and say, well, let me go log into, Coinbase and, buy some Bitcoin for our treasury. No, you're going to call your prime broker and say, this is something we should probably add to our balance sheet. Go ahead and put 10 million of IBIT, right? Or FBTC or whatever ETF it is, if it's on your normal rails, or if your bank can custody it for you. Let's make a position, go ahead and do that. You're going to do that through your prime broker. You're not going to try to, want to typically most executives, most boards, they're not going to go and bring in one of these kind of upstart crypto companies, Bitcoin companies into custody of their Bitcoin. So there's definitely going to be a flood of capital I see from the banks coming in. The other thing that you mentioned in terms of innovation, I mean, I think for banks, they're more interested in the asset aspect of things. I think the innovation is going to continue to come from the ways that Bitcoin can be used, potentially for medium of exchange, or how it can be used for other avenues. Or you're seeing innovation in the fixed income markets from Strategy. So MicroStrategy, now Strategy, has started to dabble in launching fixed income instruments for investors that can only buy, bonds or preferred stocks or those kinds of things. And so you're certainly seeing innovation there. Potentially the banks might get into some of that same space. The fixed income market's $300 trillion. So who doesn't want, Saylor's already said he wants 1% of that. I'm sure the banks are going to want to make their way into that as well. So right now, I would say the innovation is probably going to come more on the TradFi side of how to get Bitcoin kind of onto the balance sheets of traditional entities. I think that's probably what we'll see over time. But it's going to be very interesting because in a lot of ways, I mean, when Bitcoin launched, the idea was you didn't need a bank, right? Sometimes people would say, be your own bank, if you're custodying your own Bitcoin, and we'll just wait for lending products like Jack Mallers' Strike lending product to come out and offer us the ability to borrow our Bitcoin and make investments and things. So it's interesting seeing banks getting into the space, and it'll be very intriguing to see what they end up doing with it. But that's my sense, is that they'll probably take different TradFi innovations and kind of find ways to shoehorn Bitcoin into those.
Well done with the first principles section. You passed with flying colors. Wanted to grab some additional alpha for our listeners, though. What are 2 to 3 tangible steps professionals in traditional industries can take today to better prepare for widespread Bitcoin adoption in the future?
And so when you say that, you're talking about just individuals that are investing in Bitcoin, or what do you mean?
Not just investing in Bitcoin, but individuals who just work in traditional industries or who are investing in Bitcoin as well. More so, folks who are on the TradFi side.
Oh yeah, I mean, so for TradFi, number one, get curious. We talked earlier about this notion that the conventional wisdom, the conventional thinking, kind of boxes in what you see as your range of options, right? You know what to invest in. Okay, AI is coming, so I know I have to focus on that. But otherwise, I'm going to kind of stick with what I know. And Bitcoin really challenges the status quo in terms of assets. I mean, and there's a whole host of metrics that help back it up, right? I mean, Fidelity and others have talked about Bitcoin being one of the best risk-adjusted returns of any asset that there's been for 10 years. If you look back at it, it has the highest Sharpe ratio of other investments, which is this idea of given its risk and volatility, it still has much better returns than other assets like stocks and bonds and gold and so on. So number one is get curious. Start thinking outside your conventional wisdom. Two would be start getting educated in other ways of thinking. So I look at someone like a Jordy Visser. I don't know if you've seen any of his content lately. He's really burst onto the scene as kind of a macro analyst, deeply understanding AI and Bitcoin, stable coins, and all of these things. And so he's forced himself to get into other circles, to get content from other sources beyond traditional, nothing wrong with CNBC and those things, but going beyond CNBC, Bloomberg, get onto X, right? There's a lot of alpha that's on X. There's a lot of things that are happening. And so start putting dots together that way by getting other outside information. And third is start reading, start getting up on it. So when I start changing my mindset and trying to understand how does the world really, really work, ask yourself, what is money? What is money? The reason I found, if I go back to the beginning of our interview, the reason I looked for Breedlove and Sailor's podcast, I was literally typing in "what is money" into the podcast tool, and up came Breedlove's podcast, which is by that same name. And then he said, "Hey, if you're listening to this podcast for the first time, go back to episode 1 and listen to the Sailor series." And so I did. So challenge your status quo thinking about what money actually is, and people will be surprised. There's still people that think money is backed by gold, that dollars are backed by gold in the U.S. I mean, it hasn't been backed by gold since 1971. Really, 1933, if you go back to FDR banning the private possession of gold, and then 1971, basically Nixon shutting off gold redeemability for foreign central banks. People don't even know those things. You have to do the basics. Read the Bitcoin Standard. Read Broken Money. Read the big print. Like, get some background to understand what you're actually functioning in. Then start to turn your attention towards these emerging technologies like Bitcoin. Like, okay, now that I understand the current monetary system is kind of broken, it's kind of stacked against me unless I'm really, really close to the money printer. It sounds like I need hard assets. Okay, start getting educated about that. How are things like AI going to transform the job world, the job market? I always told my students, I don't anticipate AI replacing your job, but somebody that's very experienced with AI will replace your job. Somebody that can be a 10x employee that could do the work of 5, 10, 15 people because they're empowered by AI tools. So start learning about those things. And then again, you're going to come back to Bitcoin because you're going to say, okay, how are those things going to transact? How are those AI agents going to transact? They're probably going to transact in Bitcoin. So I think getting yourself out, getting curious, getting out of that kind of traditional frame of how the world works, challenging your view on like what money actually is. You think it's just dollars on the screen or dollars in your bank. And by the way, those dollars in your bank are not yours, right? So people need to kind of get down that path and understand how central banking works. Like, what is the role of the central bank? So all of this, getting a good understanding of those things, I think is really important. And then only then can you really be ready to start embracing, okay, what are these new technologies that are breaking my paradigm? Why is Bitcoin maybe a really key asset that I want to hold, I want to own, and learn about? And then finally you can get to things like, okay, now how is AI going to transform all of this life that we live? But until you can get out of that conventional mindset, conventional wisdom, you can't get there. You just can't get there.
Wonderful. It's important to start asking the right questions. And you've managed to build a well-followed profile on X. You've spoken at local Bitcoin meetups. Obviously, you're very knowledgeable about these topics, but it still reminds me of the adage, you can just do things. And So, was that something you organized yourself in terms of those local meetups, or how'd you get involved otherwise? And what was that experience like for you?
You know, when people build a persona, sometimes they really plan it out. Maybe they've got a goal in mind, a product they want to sell, a newsletter, whatever, a class, whatever it might be. For me, it hasn't been that way. I have not designed or planned exactly how I have kind of burst onto the scene at X or how I'm engaging in the Bitcoin ecosystem. It's been very organic. I really started end of 23, engaging in end of 2023, engaging with Bitcoin X to learn, and then I started learning about. That's how I learned about the ETFs. I learned about it through X, and then I just started sharing my opinion. And of course, I'm shouting into the void with 1,000 users, right? And 99% of them are bots, right? Back in those days, I wasn't really known. I wasn't even a paid member once Musk started turning the paid member thing on. So yeah, it was kind of just learning and then sharing my thoughts. And then I got into started investing in MSTR in MicroStrategy, and got into they have this group called Irresponsibly Long MSTR of other MSTR investors, kind of like an investing club, if you will, just to share ideas. So then I started sharing back and forth, and just kind of grew from there, right? Of just kind of sharing my perspective. So my X persona just grew as something that I wanted to learn. Then I started kind of sharing my thoughts. Then people would go back and forth with my thoughts. Sometimes one of my best posts actually ever was a few months ago. I was playing with after ignoring it, the whole Misty, iMist, these income products that have been built on top of MSTR. I finally said, let's sit down with Grok for an hour and figure this thing out and model out some scenarios. And I started playing with them, and I thought, wow, you could take like a couple $100,000, put it into Misty, and generate like a nice job income. And so I just shared my results and said, hey, give me your feedback. That post got over 1 million views. It finally pushed me into monetization after that and a few other posts. Again, it's all organic. I'm just trying to have a conversation. So that's kind of how my X persona has gone. I'm not, looking to turn on my subscription button or anything. Maybe I will. Who knows? If I do, it'll be for fun. And then on the meetups, cool story about the meetups. So I heard we have a nice meetup here in Minnesota of Bitcoiners and Bit devs as well, which is great. But I didn't know that, right? So I heard an ad for Orange Pill app on, I think it was on when Peter McCormack was doing What Bitcoin Did. And I said, yeah, I can meet some local Bitcoiners. My wife's tired of hearing me talk about Bitcoin. So I got the app. I reach out to a guy. I find him. He's on X. He's Joe Fi. And I say, hey, is there any other Bitcoiners that? So yeah, come to our meetup. Here's the Telegram. You got me all hooked in. And so a year or so ago, I just went as a noob, checking things out, meeting people, and then I got this incredible opportunity a couple of months ago, 3 months ago, to give my digital transformation of value talk at my own meetup. And what a cool, life is a flat circle, right? You kind of come full circle around. And now I get to kind of share what I've been learning over the last year. And if I were to say I did have a goal, maybe I would come back and hedge a little by saying, I want to educate people on Bitcoin. I mean, I think that people that are kind of trapped in that conventional thinking are struggling, and they don't get it, right? They're in their 20s or 30s. They want a home. There's no way. There's no way. When a starter home is $400,000 when it used to be $100,000, there's just no hope for them. Or they see the value of their food continuing to get worse and worse every year. People are seeing the services that they get are getting worse and worse every year. They see their government being completely dysfunctional and just going further into debt and more deficits. And they see the moral decay, of society. They see the decline of art and architecture. All of these different things that seem totally unrelated. If money is the foundation, really it is the foundation of your society in terms of how it stores its energy and value, and all these things are decaying. Well, why? Well, because your money's broken. And so I want people to understand that. I want them to get that, like, your money's broken and there are better ways to do this. There's a better way to build a society that can benefit more people. So that I would say is my ulterior motives, to get that message out. And I'm not profiting by that. It's just, I will, I guess, because society will be better, right? Better for my kids.
Wonderful. Well, before we head to our closing section, just wanted to hit you with a couple of rapid fire questions. So the first one here, what do you think is the biggest misunderstanding about Bitcoin today?
Often people think Bitcoin is a scam. It's for these crypto bros. It's for this or that, or what have you. And I feel like we're so far behind beyond that. But then just go talk to your average anybody on the street. Where was I? It was just the other day. I'd mentioned Bitcoin to somebody, and they were like, "I don't know anything about that," and they weren't even interested to know anything about it. And I thought, isn't that odd? So they just can't quite get past like, oh, it's a weird, it's a fad, or it's for drug addicts, or drug dealers, or whatever. And it's like, you got it. That's we dealt with that. We've been there. So I think people just need to get past some of those old ideas about Bitcoin.
Yeah. Is there another crypto project you're bullish on besides Bitcoin?
No.
Was that always the case?
No. So I used to be very intrigued by, like I said, by Cosmos, the Internet of blockchains. This whole idea that you could have all these. So the core premise of the whole project is that blockchains aren't going to be able to talk to each other, and so you want a project that natively allows blockchains to communicate and pass value and different things without having bridges and wormholes and all this stuff that gets hacked. And so I used to be kind of intrigued by that. I was mostly drawn in by, as a proof of stake network, if you lock up your tokens, often they will incentivize you to do so by paying some kind of a yield. And so that was always interesting. But once I really understood Bitcoin, none of the other projects really made sense. Could there be a use case? I guess. I mean, Solana seems to have had a use case with memes, but here's what it boils down to. There's really only three things, I guess, in crypto that really seem to matter. One is digital capital, which is Bitcoin. Two is stable coins. And why does anybody want stable coins? Well, the US kind of needs people to buy our debt, right? They need someone to buy our treasuries. And wow, Tether was the seventh largest buyer of treasuries last year. Maybe we should increase that. So it's very interesting to me that as you look at the three legislative efforts of the Trump administration, they led with stablecoins first, the Genius Act that's working its way through. I think it got passed by the Senate and maybe soon will be ratified by the House. Then this digital assets framework for crypto. And then three, of course, they'll get into Bitcoin maybe last. We'll see. I find that very interesting. So one is Bitcoin digital capital. Two is stable coins. Three, memes. The best I can tell is, Solana's generating all these meme tokens and all this fun and gambling. And if you go back to like Weimar Germany, right after World War I, they're well known for having this, massive hyperinflation as they're being required to pay all these reparations to the other countries that they attacked in World War I. And of course, the value of their dollar or of their the Deutschmark declined precipitously, so they just printed more and more and more and more. And there's a hockey stick chart, right, of the value of the mark against other currencies and against gold. But there's all this gambling and speculation happening during that time. Similar in the U.S. in the roaring 20s, right? Everybody was making money in the stock market and investing like crazy, gambling, right? And so that's, I think, what you see with some of these meme coins is just people are just like, they have nihilism and they're just like, I can't get ahead, I can't buy a house, I'm going to gamble on these meme coins. So no judgment, go for it. That's fine. That's great. It's legal. Have at it. But is that really going to create a lasting future for you? Probably not. So I think I come back to the first use case of crypto, which is we have digital capital with Bitcoin.
And with these potential distractions in the world, what's your go-to book or resource for reminding yourself of Bitcoin's core principles, especially during the highs and lows of market cycles?
I mean, there's so many good books, right? I hate to cherry pick. I mean, honestly, I think that the books are different books for different people are ideal, right? I was talking to a nephew of mine who's kind of more very progressive and actually even beyond progressive, really kind of is a fan of socialism, for example. And so for him, I gave a copy of Broken Money because I wanted him. He had this perception that that a lot of the ills of the United States today are caused by capitalism. And I said, well, actually, we don't live in a capitalist economy. It's actually not capitalism. First of all, you have a central bank, you have a central planning agency at the center of the economy, and so that's not a capitalist society. So for him, broken money, really understanding the foundations of money and what it's about. If I would recommend a book to, like, my dad or other boomers, or anybody who's more traditional, and maybe doesn't like to read very much. Oh, Big Print is awesome. Like I just finished it. I mean, I know a lot of the concepts. I mean, Larry did a phenomenal job citing a lot of the authors that I've read in the past, but he put it into a package that I feel like is really simple to grasp. And then he's just got a great background as a TradFi investor himself for many, many years, and burned through the great financial crisis and some of the games that were being played on Wall Street and things like that. So, his book is really, really phenomenal. I think Bitcoin Standard is great. That was the first book I really read. If you want to, on your question in terms of like what grounds me on Bitcoin, Parker Lewis's book, actually, Gradually Then Suddenly, is fantastic. It's a whole set of his essays that he's written over a series of years, and he bound them all into a book that he released a year or two ago. And that's a really good one, because he's got a lot of FUD-busters in there, if you will. Why is Bitcoin anti-fragile, right? Why won't Bitcoin be replaced by something else? All of those concepts he really thoughtfully and intellectually debunks. So I think that's a really good book to refer to.
Hey, great. And this one I've been dying to ask you. I'm curious what happened here. I heard that you asked at a work meeting once, what's the company's Bitcoin strategy? I think referring to your own company. What was the response?
It was actually very interesting, and I can't probably get into too much detail, but definitely a recognition, right, that it's a space that you have to play in, and certainly make some investments, more picks and shovels than the asset itself. So again, I'm being careful because I can go into too much detail, but yeah, that was kind of the crux of the answer. Was kind of, we're in the picks and shovels business, and not so much on the asset, and so that makes sense. I get that. I think that in financial services, that's often been a winning strategy ever since the 1848, 1849 gold rush. Did you make money, panning for gold? Well, a few people did, but boy, if you had hotels, if you had picks, shovels, tools, if you made food, boy, you always made money, because the gold miners would always come and use your stuff. So building out infrastructure, I think is definitely key. The ETFs have been a powerful tool. So all the companies that have been supporting them, Fidelity, BlackRock, Bitwise, and ARK Invest and others have done very, very well, and will continue to do well. Coinbase got added to the S&P 500. That's pretty impressive. Building infrastructure in the space. And there's a lot of awesome private, smaller companies, right, like River, Swan, Unchained, that are doing great work in the space as well. So I get it. That sense of like support the picks and shovels and the infrastructure. I mean, that makes a lot of sense too.
Okay, great. And as we wrap here, wanted to go a little broader on some of these topics and just on life in general. So we met in person in May earlier this year in Orlando at Strategy World, and to me, honestly, you seem like the happiest, most cheerful guy, and also just super knowledgeable about Bitcoin, as you've again demonstrated here today. But I'm curious, where does that joy of yours come from? Is it due to your Bitcoin success, or has that always been a part of who you are?
Yeah. Joy is a beautiful thing. And I've often been asked this question, right? Why are you so positive, optimistic, etc.? And so, certainly some of it's how I'm wired. But at the end of the day, like, it's kind of how God made me. Like, if you think about, like, God has blessed me, right, with this life that I have, and he loves me, and he sent Jesus to die for me, and to be born again as a believer. I'm like, why wouldn't I be joyful? So a lot of it is part of my view of the world and kind of how I'm placed here, and that I didn't just show up out of the ocean. That God made me and redeemed me and loves me, and so that's a major part of it. And then I am an optimist in that I can always do more. I can always do better. I can always grow. So I think there is another aspect there around Bitcoin that definitely makes me a growth oriented person. But yeah, those are kind of the two things I think is just one, just knowing my place in the universe is not random or accidental. And then and just knowing that there's so much more that I can do in the world. So.
Yeah. And why do you think it's important to have that positive energy in your life? And what do you think someone who's struggling with joy in their own life can start doing about it today?
I mean, I think there's really two things. One, I think you do have to understand what is your place in the universe. So I think if that's confusing, I think you have to get grounded on that first, right? If you think that you just kind of showed up from star stuff, then that would be my challenge to you. We think about maybe dig into that a bit more, right, in terms of where you came from. And then two would be then in your day to day, what you're actually going to work on. Can you do something that generates hope? And so if you're stuck in a 9 to 5 that you don't like, or maybe you're having a hard time finding a job, or you're working multiple jobs, like how do you find joy? I know a lot of people debunk the Maslow's hierarchy of needs, pyramid, but I still think there's value to it. And so if you're barely able to meet your physiological needs, it's hard for you to kind of go above, beyond, be joyful, look ahead, and things like that. So once you kind of are grounded in terms of your eternal perspective on like who you are, who loves you, where'd you come from, then I think it's like, okay, now I need to find work that's really meaningful, that benefits other people's lives, that gives me kind of hope for the future. And I think Bitcoin can definitely help with that. Like prior to me finding Bitcoin, I had my faith, so I'm grounded there, and felt good, and always was fairly positive. And so for me, once I found Bitcoin, it just like accelerated. Now I'm just like really excited, because I'm like, wow, there's like so much we can do now that I have this really good asset. I can store my energy. I'm going to pay off some of my debts and bills, and then I'm going to have like this whole future that I can give to my family, and be able to bless my community, my church, and so on. So I already kind of was grounded in who I am and could be positive through that. But now with Bitcoin, it's like supercharge it. Right now, it's like, oh my gosh, there's all kinds of things that I can do. That's super exciting. So I think that's what a person has to do: figure out who they are, where they come from, what are they about, and then find a way to channel your energy into something that's just going to just give you hope for the future. And I feel like, and then store that energy someplace. And naturally, I'm going to say that place should be Bitcoin.
Great. And you self-identify as a futurist. In 50 years, what story will Bitcoin be known for?
I believe that in 50 years, Bitcoin will be the global reserve asset. I don't think that's going to be in the next 2 or 3 years. I know there's a lot of views on even Larry's book, right? The big print. The big print, I think, will come in terms of fiat trying to catch up to all of its sins of the past, all of the debt that it's taken on. But I don't know if that's happening in 5 or 10 years. But if you look 50 years out, why would you want to store your energy anywhere else? Where are the AI is going to want to store their energy or transact? Well, they're going to do it on Bitcoin, probably over Lightning, because it's instantaneous and can use micropayments and all of that. So in 50 years, why would you want to have any other world reserve asset to support your country, your company, an individual, a family? You wouldn't. It's going to be Bitcoin.
Okay. And you touched a bit on your children and your community. How do you hope your children or future generations will remember your role in this massive technological shift that's taking place today?
Yeah, I hope that all my children hold some Bitcoin. They're Bitcoiners, and so that's fun. And so my hope is they look to me somewhat like perhaps the children did in when the country was first founded, as a pioneer, particularly the pioneers that went west. So I've got my cowboy hat. I absolutely love the West. I'm not from the West, but I adore Montana and in Wyoming, Mountain West of the United States. And I've read stories about the Oregon Trail and the challenges that it took to, get from the east or the south and make your way out to stake a claim, to build a homestead and get a farm, get a ranch going, and provide for your family. And there are some ranches today that are still around. And so I hope my kids look at me that way, as like, oh, Dad was part of this like pioneer movement. Like Bitcoin, metaphorically, Bitcoin is going west, like it was, in the 1800s in the United States. And so that's why I hope they see me as a digital pioneer.
Wonderful. Well, Mr. Lee, thank you so much for all of your insights and your time today. I've enjoyed this conversation. The time just flew by. Look at that. So thank you again for your time.
Yeah, this was a fun conversation. It was awesome to meet and chat with you in Orlando. I really enjoyed that, and hope I get to do that again at another conference.
Absolutely. All right. Until next time.